Housing prices may be stubbornly high, but the financial guidelines for putting together a down payment still apply. So you want to buy a house in 2025? That's cool. Just be ready to cough up a down payment the size of a luxury sedan. Fight other buyers who treat open houses like Survivor, and tell your latte habit goodbye for the next decade. It's no secret. Home prices are still riding high, even if they've come down a hair from the dizzy heights of late 2022 back when sellers were basically auctioning their fixer-uppers to the highest bidder with the best sob story. Sure, the Federal Reserve took interest rates to the gym and bulked them up, but the cost of the average American home still hovers around $412,000. That's nearly 50% higher than 10 years ago, and trust me, your paycheck has not kept pace unless you're a crypto bro or you invented a cat meme NFT, in which case, why are you reading this? So yeah, it's tough out there. But here's the thing. Just because prices are stubborn doesn't mean the old rules of smart home buying got thrown in the same dumpster as your landlord's promises to fix the broken dishwasher. In fact, if you want to survive this market with your bank account and sanity intact, you'll want to brush up on those timeless down payment principles with a modern twist. Also, stick around to the end. There's free money on the table. Sort of. Meet Jamal. Jamal is a real person in this story, or maybe he's all of us. 29, steady job, decent credit, tired of feeding his landlord's boat fund every month. He wants his own place, a backyard for the dog he doesn't have yet, and a garage so he can pretend to fix things like his dad used to. One day, after spending his lunch break scrolling listings of homes he definitely can't afford, Jamal decides he's done renting. He checks his bank balance and immediately remembers he's still paying off that buy now, pay later couch from 2022. But hey, where there's a will and a little financial literacy, there's a way. So what did Jamal learn about stacking up a down payment in this overpriced circus we call the housing market? Let's break it down the way he did, with a healthy sprinkle of urban reality check humor. Figure out what you can afford and be brutally honest. Before you even Google cute starter home, get real about your budget. It's not just the mortgage, it's taxes, insurance, maintenance, maybe an HOA that charges you $200 a month to repaint your mailbox. Financial pros say to follow the 28-36 rule. 28% of your gross income max for housing costs, mortgage plus taxes plus insurance plus HOA. 36% max for all debts combined. If you stretch these numbers, because Zillow is showing you a dream home, you'll end up house rich, cash poor, and fund bankrupt. Jamal's move. He used an online mortgage calculator while eating noodles straight from the pot and realized he could comfortably afford a 300-0 home, not a 412-01. Harsh? Yes. Smart? Also yes. Alternative housing. When considering alternatives to traditional single-family homes, options such as manufactured homes, townhouses, condos, and prefabricated houses can offer more affordable paths to homeownership. Manufactured homes, built entirely in a factory and transported to the site, often cost significantly less per square foot than site-built homes. Townhouses and condos can be ideal for buyers seeking lower maintenance living, as many exterior and landscaping tasks are handled by a homeowners association. Prefabricated or modular homes combine the efficiency of factory construction with the flexibility of custom design, resulting in shorter build times and potentially lower costs. These alternatives can help buyers enter the housing market with smaller down payments while still providing many of the benefits of home ownership. Mind that credit score. It's like swiping right for a better rate. If your score's below 620, getting a conventional mortgage is about as likely as your ex texting you a sincere apology. Higher score equals better rate equals lower monthly payment. Jamal's move. He set up auto pay on every bill, paid down his high-interest credit card first, and didn't open that tempting store card just to get 10% off today only. 6 months later, his score climbed 30 points. Win. The golden rule. 20% down payment. In an ideal world, you bring at least 20% to the table. On a 300-0 house, that's 60-0. Why so much? You skip PMI, private mortgage insurance, the lender's way of saying, pay us extra, just in case you bail. You look serious to sellers, they want deals that close, not drama. You owe less, so monthly payment hurt less. Reality check. Most first-timers don't hit 20%. That's life. There are options. Less than 20%? Here's the good, the bad, and the PMI. You can go lower. FHA loans, as low as 3.5% down. VA loans, 0% down if you qualify. Thank you for your service. Some conventional loans, 5 or 10% down. But remember, less down means more debt, bigger payments, and the unwelcome PMI tag-along until your loan balance shrinks. Jamal's move. He aimed for 10% down. He calculated PMI costs into his budget so he wouldn't freak out later. Free money? Sometimes. Look for first-time buyer grants. This is where watch till the end actually means something. Cities, states, and the federal government sometimes offer grants actual cash you don't repay or zero-interest loans for your down payment. Catch? You may need to stay in the house for a certain number of years, meet income limits, use an approved lender. Jamal's move. He found a local program that offered him $7,500 toward his down payment if he stayed in the home 5 years. He filled out paperwork thicker than a phone book, but free money is free money. Family loans, gifts just don't make Thanksgiving awkward. Family help is common. Parents, grandparents, that uncle who hit it big on Dogecoin, all valid sources. Gifts are straightforward. They give, you say thank you, you both smile awkwardly at the closing table. Loans get sticky, the IRS wants it, official paperwork, interest, a repayment plan, and lenders count it in your debt-to-income ratio. Jamal's move. His mom gifted him $50. She was going to surprise him with an espresso machine. This was better. Stock awards. Retirement loans proceed with caution. Got company stock or stock options? Cool, but know the tax consequences before selling. 401k loan? Legal? Yes. Smart? Usually not. You're borrowing from your future and paying back with after-tax money. IRA withdrawal? You can pull 10 0 penalty free for your first home, but taxes may still apply. Jamal's move. He left his retirement savings alone. He wants to retire with a beach condo, not a half-empty 401k. Save like a pro, not a dreamer. Last but not least, build your down payment the boring way. Automate transfers to a high-yield savings account, skip impulse buys, and stash any windfalls bonus, tax refund, birthday cash from Grandma Pro Tip. Money for your down payment shouldn't be in risky stocks if you're buying soon. A market dip the month before closing heartbreak. Jamal's move. He set up auto transfers the day after payday because if you don't see it, you won't spend it at Taco Tuesday. So here's how you can do what Jamal did, minus the instant noodles unless you like that vibe. Check your credit score, fix it if it's rough, pay bills on time, no new debt. Crunch your true budget. Be honest, use the 28-36 rule. Aim for 20% down. If you can't, know what PMI will cost. Research assistance programs. Local, state, federal, you'd be surprised. Talk to your family. If they offer help, make it official and IRS proof. Keep retirement money for retirement. Seriously. Automate your savings. Out of sight, out of mind, and out of Amazon's hands. Work with a trusted lender. A good one explains everything, no ugly surprises. Buying a home in 2025 might feel like climbing Everest in flip-flops, but millions do it every year. Jamal did it, noodles and all. You can too if you know the rules. Prepare smartly and resist the temptation to buy a house with 5 bedrooms and no money left for furniture. The best time to plant a tree was 20 years ago. The second best time is today. Same goes for building your down payment fund. Now go get that dream home. And hey, keep the latte. You've earned it.